All right. Good morning, everybody, and welcome to another Engineering the Markets. Happy new week. Happy Valentine's Day to all those joining us this morning. My name is Jared, and it is February 14th, 2022. Let's take a look at our market condition, and let's talk about our theme for the week, which is going to be perspective. Now, as we always like to do in our Monday session, we like to gain some amount of perspective on the S&P expected movement by marking the expected move for the weekly series. And if you've joined us in the past, you'll know that we take a look at the expected move by using the option market pricing. We measure these movements based on the close of the Friday session. And we often like to see not only what is the expected move for the week that we're about to enter, but we also like to look and see how well has the market been pricing volatility over the past couple of weeks. Now, I've left all of these expected move measurements marked on this particular index to showcase that over the past couple of weeks, while things have felt a bit uncertain and ultimately a bit volatile in the short term, we've seen wild movements in both directions, usually sparked by uncertainty and then the alleviation of fear. From the option market perspective, things have actually been somewhat expected. You can notice that on one of the most volatile trading weeks, while the volatility was elevated during this time, accounting for these wild price swings, the market was able to capture this range and essentially define an area of the market that the price was more likely to trade within. The following week, we saw volatility remain elevated, but we talked heavily about volatility from the futures market perspective, the idea of contango and backwardation, and how this can drive certain short-term price movement in the form of hedging and things like negative gamma exposure in the market. And from the option market expected move, while we did see a very brief breach of this top side expected move, the market was able to close essentially mid-range and somewhere captured within this expected move. Moving ahead on the week that just passed, we actually saw one of the lowest expected move readings we've seen in recent trading weeks, as the market was starting to define what is often referred to as a fairly normal expected move range, approximately 107.48 to be precise. And while the market did have some interesting price action, we saw a gap that we analyzed every single day of last week. We talked about trading opportunities around that gap. And ultimately, the gap provided some of the key levels for last week's trade. The option market on the background simply was seeing a market that stayed in range. And although we did see a heavy sell-off on Friday's session, we actually didn't even breach below the expected move for the week. We stayed inside of our 107-point range. And that's simply because we were coming from such an elevated position. So when you look at a chart like this and the perspective it gives you on some of the movement, you could argue that the market really hasn't done anything abnormal. There has been some wild trade, absolutely. You can notice simply by the fact that a lot of these candles have pretty large candle bodies, which means that once a move starts on the intraday session, it usually doesn't stop until we get to the other side of the range, or essentially long trade type activity or trend day opportunities in the short term. And these are often facilitated by some of these key levels, which sort of give us the ignition or the confirmation of a move. And then, of course, with any uncertainty like we saw Friday, the threat of countries being invaded and some of the continued inflationary pressure and the reaction from the Fed, these are all catalysts that are providing the fuel for this market and ultimately can provide trend day opportunities if you're inside of the retail trading space. So looking at this chart, we talk about how the market has been somewhat efficient over the past couple of weeks. Yes, they've raised volatility to capture the movement, but they've been right. There hasn't really been any significant breaches. This is really our only breach of expected move, and the following session was our earnings gap down after Meta reported its earnings. So looking to the week ahead and talking about how the market so far has priced expected move quite well, with last week's session actually capturing a large portion of that expected move. If you're talking from the middle, which is the close on the Friday session, all the way to the lowest print, since that is the widest range from the close, the market actually gave you about 0.91 or 0.91 of all of that expected movement, or basically 91% of the move was captured on this past week's session. And as we look ahead, we're looking at a market that is pricing a bit more expected movement. So we have seen an increase. We're seeing volatility come back into play. The market has essentially fallen back into a range where we know volatility spikes. The VIX tends to be elevated in this trading range, and the market movement tends to be wilder than most participants can anticipate. Now, as we see, this is a $135 expected move, which puts our top side range for the option pricing at about 45.54 and our bottom side range at 42.83. Now, I want to speak to this in terms of perspective, since it is our theme for the week, and talk about the idea that while the option market has been pricing these moves quite well, it's also true that we are achieving large portions of that expected move. And as you can see, based on Friday's close, we did somewhat close the week poorly, at least from the bull perspective. We are seeing some topside resistance. We're seeing that double top structure, a rejection near key levels, and of course, the eventual collapse of our swing low, which, if you recall, was a very important low for this market to hold based on how it was set. This day and this swing high is the announcement from the Fed and the FOMC minutes. This is a fear high that the market was able to break out from, move in some sort of corrective phase to a structured level, hold on a back test, and then provide a secondary attempt to break higher, at which point we have failed this initial breakout and have moved below this particular price. And as we shift into the S&Ps, it gives us a sense of what sort of movement we can expect this week. The perspective of risk and the idea that the market is at a price level that we have experienced recently. So our anticipation of movement should be similar. And what does that mean? Let's talk about the week that just passed. Let's talk about this gap and ultimately put this particular structure to rest. Because as technical analysts, we want to see what is in play, what is the most important structure to focus on, and once that structure is no longer relevant, we either remove it from our chart, take a snapshot, put it in our archives, and we move forward. because we're trying to trade what's up and coming and not simply look back at a missed opportunity. So last week, we covered very heavily this idea of a gap. Gap traders and those who understand gap structure should have left this gap on their chart for an extended period of time last week, as it was an area of the market that was heavily in play. And I want to just highlight how relevant this gap area is based on last week's trade. You'll notice this rectangle here. You can go ahead and maybe darken it up a little bit just to get it on our chart. Not only was this area relevant for things like the double top that formed in the S&P. Yes, it's a double top that's not at all-time highs. It's simply a test of an upper supply zone in the market that so far has showed itself as resistance. Usually when you get swing highs, markets like to retest them. And usually when you get such elevated swing high readings with a gap, the market will often retest the gap in multiple ways. Sometimes the gap itself, it's so exhaustive for the previous move that rejection of the gap occurs near the bottom side or top side, depending on which directional gap it is, a bullish or bearish exhaustion gap. And we certainly saw that initially. Lots of price activity occurring near the lower bound of this trading gap, and plenty of very key rejection on the absolute low, which, if you recall, was 450.95. Now the market gave us an opportunity to trade inside the gap. We saw pre-market activity on, let's see, this is Wednesday's session, run into the gap. And the approach that we took on Wednesday's session was that good shorting activity is unlikely to occur until we fill this gap. We were not done filling the entire gap at that time, and until the market finished its rally, good short opportunities, ones that had follow through, not necessarily shorter time frame pullbacks, were less likely to occur until this gap was filled, at which point the next move, a move above our swing high or a rejection back into the gap structure, would set up for the idea of a short or a long in the market. And obviously, market finished filling this gap on the Wednesday session. We saw plenty of resistance showing itself very forthright as we got CPI data. The market fell all the way to the gap low on the CPI data report. Some technicians will say, well, you know, these levels are magic, and it tends to be true. Perspective is important, even if you're looking back in time. This information was known only after it came out to the market, and yet the market low was on our charts prior. We knew to some degree where this key support was going to be, and this provided both a great long opportunity back to the gap high, back to resistance. And then, of course, as we saw more Federal Chair discussion and the idea of maybe a double or even accelerated rate hikes in this year, the market saw bearish activity from this high, finally breaking down from the gap. And then last but not least, our back test. The idea that the market has a support and resistance structure, whatever it happens to be, doesn't have to be a gap. But whatever it happens to be, if the market gives signals like these, where it indicates that this support is no longer holding as support, we can't reclaim above these areas, then price will often respond by falling at the very least to our next support zone. And as we can see, even this support zone didn't hold very long, as the market closed very weak on Friday's session, and the fear of a potential geopolitical invasion and war started to creep into the market for Friday's close. So hopefully everybody is looking at this as historical information. They're understanding the idea that if we get these structures moving forward, they are tradable areas of the market. They provide opportunity. And in the best case scenario, if you take the longs where you're supposed to, you profit take where you're supposed to, and you flip your mindset and your position where you're supposed to, then sometimes the market can reward you with not only a transition, but also the best risk to reward location that we've seen so far for a potential short. And this gap was so important on last week's session that we talked about it every single day until the market has moved away from it. So at this point, we'll go ahead and delete this area and understand that this is not all dry. So I want to just delete this one. Understand that this is the type of analysis that we like to provide on these engineering the market sessions because they're actionable activity. The analysis we do can be brought into your intraday trade, can be brought into your swing trade, and ultimately whatever the market does around these levels will dictate our perspective moving forward. It gives us the right mindset. Why are we bullish? Why are we bearish? Is there a reason? Is there a signal? Is there a structure that we're using to indicate risk if we are wrong? And is the market confirming our thesis day in and day out? For that gap, it certainly gave us plenty of opportunity on the short term, and now we have a very clear level for a future breakout if it ever does occur on this session. But for now, the market is heading lower. We've seen a drawdown from Thursday and Friday's session at a key level. We've broken swing high support. We've closed below it. This is this print here. And as you can see, the selling volume is elevated. So for the short term, we want to respect the bearish momentum until they can negate this move, until they can prove from a bullish perspective that the market is not necessarily going to transition back to these lows, back to a range low. And basic range trading analysis here, if you're able to break down into a trading range after a failed expansion, oftentimes you will get moves back to key levels near the bottom of the range. Markets like to test and retest these areas time and again, and our signals come from failed expansions, from breakdowns and breakouts, and whatever other technical signal we like to leverage in order to get our risk and reward correct, in order to step into a market from a directional bias perspective. So as you just saw on the S&Ps, our expected move brings us down on the lower bound to about 42.83. When we look at the SPY and we look at the technical perspective here, that's all we're doing at this point in time. There's going to be plenty of catalysts this week. We'll get into those as they start to form on tomorrow and Wednesday's session. But stepping into a week where we are entering a volatility range, where the market has proven to us in the past that if you trade in these ranges, it is possible for things like the VIX to break 30 and to spike multiple sessions at a time, all the way up into the high 30s. It's possible for the market to see volatility futures go from a normal contango state into what we call backwardation. And as you can see, if I'm looking at March, trading at 27.45, I'm looking at April, trading at 26.75. Guess what? We are in backwardation once again. The market immediately switched into fear and hedging mode. Basically, all hands are looking to the downside at the moment. There's fear in the market. This provides opportunity, but it also provides plenty of risk. You're going to see quick movement this week as long as we stay in this range from high to low and from low to high. It's going to come almost out of nowhere. We can get small news events. This will provide the fuel and the rationale behind the move. But at the end of the day, the market's simply in a volatility zone. We're going to see whipsaw. It's possible for the market to continue to sell and provide additional fear back down to the lower 430s and even, let's say, 425. We won't talk about the swing low quite yet. This is a capitulation low. It's a low that is often set by margin call activity in the market, a deleveraging. And usually when you see these lows, there's a secondary low that gets set after the fact. This is where the market did stop selling. This is where the market topped out after the leverage has been removed. This is the idea of sort of clearing the table, clearing the order book. Markets often rally once this deleveraging event has occurred. And then you often get a secondary low. This one to me is more important for the time being. So for now, 427.19 is the low that I care about. It's a low that the market might be trying to test. And it's doing it from a failed range expansion. Not only did the market breach our swing high, but it breached it, traded for multiple sessions, rejected a secondary high that was set, and has already broken down back into our volatility trading range. These are expectations for the week. They give us perspective on what sort of trade activity we can anticipate. And just to comment a little bit on last Friday, I think last Friday caught a lot of traders off guard. Once again, this market seems to be in a perpetual bullish mode in regards to perspective. People look at dips as always buyable. They look at things that are selling off and say they will more than likely recover. So they average in, they get heavy size, and when the market doesn't give them their thesis, they often stop out in a dramatic fashion, usually giving back multiple sessions worth of profit and simply disregarding their rules as traders whenever things really start to unwind. Now, one of the clearest examples on Friday was AMD. If you understand the idea that the market is pricing in fear in the sense of some of the material, I would say monopolies that are set in Russia and Ukraine. You want to be thinking things like palladium, neon, and even some of the future risk that the market can start to perceive. If Russia does do something dramatic, can it spill into China? Can it spill into Taiwan? Can it affect chip producers? These are all simple theories that you can be understanding while you're inside of a live trade. And when you look at these charts, it seems so obvious in retrospect. It seems like such a simple concept. Why are you trading long at resistance? Why are you trying to catch a reversal that the market is not advertising whenever the market is in a fear-based sell-off, trying to unwind risk and basically reallocating their position? By they, I mean big money, and essentially avoiding the risk for the time being until more information is known. I think a lot of people got caught up in this sell-off. Either you were bearish and simply holding or adding to a core position because the market really never bounced. We got some decent recovery bounces. This is the scalper mindset. But for the person who averaged down, unfortunately, you were able to carry a position till the end of the day, and you probably stopped out with a very severe loss. Additionally, this carried over into the entire semiconductor space. You want to be thinking about outflow of ETFs. These are all bearish flag patterns. Massive sell-off, recovery bounce, the bull trap mentality, and then the first breach, the first sign of continued weakness. The idea that the market is advertising that, hey, there's still risk in these assets. And this outflow will affect all stocks in a similar way, regardless of things like market cap and even things like upcoming anticipation for earnings. This is all short-term perspective. Day traders need to take what the market is advertising in the moment and understand risk as it's occurring. So last but not least, as we shift into our last thing for the session, on Friday's session, there was a massive recovery and a counter trend sort of play inside of the bond market. I'm showcasing it here in the TLT, as not only has the TLT been a very technical ETF for us to analyze, but additionally, it is responding off of this reversal at a very key swing low. This is a price level we've had marked ever since we broke down from this upper range. So the market did respond in a reversal structure. There was a reallocation of funds back into bonds. This gives us a sense of what the upcoming move might look like. We might get a move back to our retracement downtrend line. This is just our weekly sort of downtrend, trying to capture some of the swing highs on the retracement. We're still in a very clear downtrend, but in the short term, the reversal does appear to be setting up, and we can likely target here. And at worst, we can even think about a retesting of this trading range, essentially forming the beginning of a possible head and shoulder structure. But we have shoulder, a lower bound that is starting to reject quite heavily, and then a sharp move back to our swing high before setting up our right structure. So these are all concepts that we'll be talking about further this week. Perspective, different perspectives. Good technical analysts will often try to leverage as many perspectives as possible. They'll think about the risk or reward in each of those theories or each of those thesis ideas. And the one that gives the best information, the best potential, or even the best probability is the one that they'll take. They'll structure their trade accordingly based on the risk, and they'll understand that if they're wrong, they know what the other theory looks like. They know what the more likely scenario is in the case that they are wrong, and they will start to unwind, stop out, or basically reduce their risk accordingly. So as always, trade safe in this market. It's going to be a pretty wild week as we get more information about the upcoming events. And until the market gives us clear signals, expect this volatility to continue moving forward. So stay tuned for pre-market prep. We'll talk more tomorrow. Until then, keep it green.
All right. Good morning, everyone. Welcome to the pre-market prep. I hope everyone is having an amazing morning. Hopefully, you guys are having had an incredible weekend. Enjoy the Super Bowl if you're into that. And Peter, good morning. How are you doing today?
Good morning, Carlos. I am doing fantastic. Hopefully, you can hear me.
Excellent. Yes, loud and clear, man. Loud
Excellent.
and clear.
All right.
Beautiful, beautiful. All right, guys, let's get into some of the market stuff. Jared went through a lot of it already. We've been having such an amazing, incredible market, Peter. I mean, it's been fun. It's been a lot of fun, a lot of excitement. I see you guys at the close as well. Even getting into the close is exciting to see how everything is going to end. Excuse me, going to end. Give us a heads up on the overall market, what we got going on for today and this week.
Yeah, not a lot. Well, that information I don't think is current that we've got on the screen. Not a lot happening today. I just see one U.S. Fed being interviewed. That being said, that's should be starting right now. And James Bullard, who's the Fed chair who's being interviewed, had made some comments in the past weeks that we'll see if there's a retraction or a change in posture there. But I don't expect that to have a big impact on the market. The thing that's impacting the market that we're all probably aware of by now is the impending or threatened invasion of Ukraine. That definitely seems to be weighing on the market, and maybe a little bit of Super Bowl impact. We'll talk about that in a couple of minutes. So we'll see what the day brings. I mean, we are sitting in a cycle where any news, any piece of information that comes out about some of the major, political events happening could radically change the tone and direction of the market. So be cautious.
Oh, sorry about that. I was on mute. Yep, agree 100% with you, Peter. It's a very interesting marking, that's for sure. All right, with that said, guys, let's take a look at our gappers list this morning. We got a couple of things in the green and in the red. None of the big names so far in here that we've been watching all week. So we'll see. We'll give it a little bit of time, probably because they're just SPY's a little bit flat right now. They're figuring out what's going to be next. I see Affirm is on here on our gap down list, and man, what a hell of a stock this has been. I mean, it's just been incredible, guys. So if we take a look here at Affirm, this is their daily chart. I mean, these guys dropped heavily to almost 20% loss last week, and then some again on Friday, and more this morning, slightly about 4%. So we'll be keeping a close eye on that one as well. Let's go ahead and take a look at our gappers list, guys. Start here with CNR this morning. We'll start there. CNR is up 26% right now, 576,000 shares traded. So pre-market activity looking very, very active, as you can see here. For the most part, the daily doesn't get a whole lot of volume. 4.5 is the highest thing I see on here on this day. Outside of that, very low volume for the most part on this one. So I'm not sure what to think about this yet. Pre-market's
Yeah,
active. Yeah.
it's here. We've. I don't think I've ever traded this. Never heard of it before. There seemed to be rumor of an acquisition. Oddly, there seemed to be acquiring a company that's almost has the same name as them. So whether they split and now are looking to rejoin them or whatever, but I don't expect it to trade well.
Yeah, yeah. Same here. I mean, I know the pre-market action looks very exciting right now, but I'm not a big fan of this one. AU this morning, not a whole lot going on, guys. Up 4.3, but outside of that, they're pretty quiet right now. And then what is this, by the way? Oh, it's a gold ticker here. So yeah, they don't usually
It,
trade
it,
very well for the most
Yeah,
part.
and we have to remember this is Anglo Gold, which is a company. It is not an index, so the
Yeah,
ticker
yeah.
symbol might lead you to believe otherwise, but it doesn't usually trade well.
Yeah. Indexes are a little bit better sometimes if you're going to trade them. Sometimes, again, this is one that I probably would never have on my list. YNDX guys, this we haven't seen this in a bit here. They are up 3.4, 184,000. They're not the best day trading stock. We did have fun with them some a while back. It was on our list quite a bit. It was trading very well. It's very volatile, a lot of volume. It has dropped off since then as far as volatility and volume. And this morning, we're seeing a small pop here, but not a great pre-market activity. And I'm hoping that we get stuff that looks better than YNDX on our list, right? So on short selling restriction, we do have shares for short, maybe a possible. I'm not sure what to think on this one, Peter. What's your take
Yeah,
on
I got
YNDX?
I've got no news on it that I can find. So if anybody knows of any news, let me know. But it
Yeah,
can sometimes trade well.
yeah,
I've
yeah.
had some good trades on Yandex. It is a foreign company out of the Netherlands, but occasionally when it gets to the volume, it can move. I just don't know why it's moving today.
Yeah. We'll keep it off the list for now, guys. We can always come back to it. GT this morning, not doing much. Had a hell of a drop on Friday. Today, up 3% here, but not a whole lot of volume. Again, this is the Goodyear tire, I believe. Yes, the Goodyear
Yeah.
tire. And they don't trade very well. They're very light on volume, but looks like must have been earnings on Friday because this drop is just insane. I can't think of anything else why they would drop like that. And looks like February 11th was that Friday. No. Actually, yes, that was Friday. All right, so earnings, pre-market earnings, that's what caused the drop here. I don't expect them to do much today. That's for what we're looking to do here. SoFi this morning, very active, guys. 2.4. I think this will be worth taking a look at. Has a beautiful pre-market activity right now. Nice pop here. Some good volume with some a couple of shares being traded there. Up 2.3. I think SoFi will definitely take a look at this morning. If there's any news, that would be even better, but I'm not sure if there is on this one. Um,
SoFi, what's interesting. So this might be the Super Bowl impact I was
yeah.
talking about. I see no news on them. However, obviously their name was splashed all over the TV last night to a lot of people
Yeah.
that may have no idea about this company. I can only guess that this massive volume and a little bit of a bump in the stock is people saying, "What the heck was that? How did they name a stadium?" Maybe that's something we should look at.
Yeah. Yeah.
Otherwise, why else are they jumping? But
That's true. They were
obviously
definitely all over the place. That's
they
for
had
sure.
naming rights for the LA stadium where the Super Bowl was held yesterday. So
Yep. SE, let's see what's gapping down this morning. SE so far at the moment up, not down 9.7, 459,000. Not a great pre-market activity. This one doesn't trade very well at all, guys. So I'm gonna skip on this one. DCFC, I saw Brian trade this a couple of times last week. Down 5.8, 114,000 at the moment. I think the fun might be over on this, so just be careful on this one right now. I don't see anything great to keep this on our list. A firm, I definitely want to watch A firm. I mean, this thing just continues to drop here. It's been definitely a bloodbath for them here. They're down another 5.1, which does not seem like a lot after the last two trading days. But we'll see. 595,000 shares traded. The issue with A firm is that is the pullbacks are very aggressive. They're very, very volatile. So we'll have to see what's going on there.
and as we learned last week, big moves in this can happen at any time. So
Yeah.
be
Yeah.
careful.
Yeah. And, on these type of companies, and I traded this once last week, did not have to take a whole lot of shares, very small amount of shares and just expecting the move to be bigger than what normal stocks move, right? You can move $2, $3 very easily on this. You do not need to take a boatload of shares because then that will make you stop out quickly if you have a tight stop. You cannot have a tight stop on a firm. You will get stopped out more often than not, right? So just follow your plan there. Over on our chat, yeah, it looks like there's something going on with the video and audio. I had the same thing when Jared was streaming his chat. I also had a delay in the browser, so we'll figure out what's going on there. YouTube should be completely fine. So if it bugs you the little bit off sync, which I know it'll bug the crap out of me, you can go over to YouTube and watch it from there. But yeah, we're aware of the little off sync we're having there. We'll figure that out with our tech guys. Heading down here, guys, Becky, BEKE this morning. They're not doing a whole lot. They're just down 3.6, but not doing anything exciting there. IonQ, I'm not a big fan of. Right now, they're down 3.2. I know they were on our list Friday. Let me go back and see how they actually traded. I don't see anything exciting on Friday. Doesn't see anything, got a nice little poppy, but outside of that, I don't see anything that was like, oh man, we missed out on something, especially the way everything else was, right? We had a lot of stocks that traded very well on Friday and all last week. It's been a very exciting week. So far in the list, guys, just two. SoFi and A firm. Neo looking good this morning. I like Neo. Down 2.2% right now, 953,000. We got some good volume. We're holding on to this level of support. That's been support for some time here, trying to stay above that right there, that 2361. Our pre-market low is a little bit lower. This could be fun. We can probably keep this one on deck. We'll put Neo on here for now. And then Peter, what do you have on your end?
Well, a couple of areas to take a look at. Jared sort of mentioned them in engineering the markets, but just to remind us, with the concern over geopolitical events, oil stocks, we've seen a big increase in oil prices, so there's been movement there. That there also has been an increase in gold prices. So gold, if you follow that as an index, is something that certainly has been on the move. And then semiconductors. Now, most of you probably know by now that I love to watch AMD. It has been moving fantastic over the last little while.
Yeah.
Unfortunately, not to the downside, but I
Hmm.
don't care as long as it moves. It's good. But there is a concern generally in the semiconductor space that that there may be further shortages, especially if China makes a move into Taiwan, which would have a huge impact on semiconductor supply. So, whether that pans out or not, what we're seeing now is just that jittery stature in the market is causing some movement. So I'm going to definitely keep an eye on AMD. I know others like NVIDIA, which has also been
Yep.
moving well. So those are two ideas to take a look at. Last one
Yep.
I'll mention, no particular trend here, but I found that Apple has been moving pretty well. I mean, always gets volume, always has good sort of general volatility, but I found it's been a pretty good trader and one I just keep an eye on throughout the day.
Could not agree with you more, guys. AMD, Nvidia, and Apple, three of these looking very, very good, and they've been on our list either, if not on the main list, because something else looks slightly better, and we kind of want to be a little bit diverse by having only Apple or AMD, and then filling the stuff with other companies, travel sector, and other tech stocks. You could keep this on your possibles list, but these three have made an appearance on our list quite a bit here because they're just trading so well, especially Nvidia. AMD and Apple, they tend to trade decent with any type of volume, but Nvidia has really stepped up as far as trading well. It's a stock that normally we would not have on our list. All right, let's take it to the room here, guys. Let's start with Chris. You're giving us AMD. That's good to go. We have that there. Heading down, we have Lucid. Let's take a look at that. I have Neo on my list right now. Lucid, up down 1.7, 764,000. I like the daily on Lucid. We're losing a level here. This could be interesting. Love the pre-market slightly lower than that. So their daily looks very clean. I don't think Neo looks as clean. Yeah, Neo not as clean as far as these levels. You do have some levels down here that you can follow, but yeah, Lucid looks good. It's worth watching.
What what's interesting here about the EV car company? No specific news, but remember those two things that I just mentioned: both oil prices and chip manufacturing, both impact electric cars and
Yeah.
the public perception of them. So we're seeing some movement. I know that LI, not a lot of volume this morning. They did announce they were looking to double production out of their Chinese factory from 1 to 200,000 cars per year. So that may move a little bit, but you're right. I generally like Lucid. It's one of my favorites, our car companies to watch. It tends to move well with good volume.
Yep. Agree. 100%. I'm gonna put this one on
As
here.
Dan F is mentioning, EVs were certainly in the Super Bowl. They were in the Super Bowl. Silverado, was certainly they were talking about their electric truck, which I thought was interesting. They were heavily promoting the Silverado truck there, but that's
Hmm.
a North American company. I don't know whether they're going to get a bump out of that. What is Silverado? It's a GM. So
Uh, I believe no. Yeah, it could be GM. I'm not sure. Could be GM.
Chevy,
Chevy. Okay. Yeah. 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 Yep.
yeah, which would be under the GM brand then, I guess, right? So,
Yep.
so
Yep.
I don't really think they're going to get a bump as a result of that, but
Yeah.
it's just public awareness. I feel like we're definitely hitting the tipping point here on EVs, where everybody's sort of jumping into the bandwagon. So, longer term, who knows what that means in the immediate term? We just watch it for trading opportunities.
Yep, yep, absolutely. Right now, looking at GM, not much happening there. Pretty quiet for the most part, but that's typical GM. We'll have to wait for the market open, see if that's going to cause any action for us. Let's take a look here, guys. We have Lucid is good. Rivian, Rivian. I'm me personally, I don't like as much. It is moving very active this morning, 403,000. It is up 1.4 right now. You can watch this one if you like. I'm not. I'm gonna keep it off my list, but definitely one that's moving decent this morning. Let's take a look at Tesla, another one that's also moving well. I have a Neo and a Lucid. I'm gonna keep these two. I have Lee here, but I'm probably not going to keep that one. It's just too many. So I'll probably keep Neo and Lucid this morning on my list of EV stuff. AMC, what's happening there? AMC's got some activity. We're 548,000, pretty much flat right now. We were down quite a bit, so we did recover here nicely a little bit, getting a little bit of a bounce. Could be interesting. I like their daily here for a possible break, like we had last week, right? From 19 to 21. This could be exciting if we can get some kind of push like that. We're going to need some help from our friends at Wall Street Bets if we're going to do that. Going to put it as a possible for now, and we'll see what's going on there. CNR, I think we looked at this earlier. Again, this could be a hit or a miss. I know pre-market action looks very good right now. I'm not gonna have it on my list. Just be careful with this one, guys. It usually trades very, very thin volume. Spread is good right now. Volume is good right now. So who knows? Maybe today could be the difference on this one. But for the most part, I'm not a huge fan of it. So put it as a secondary list. Let's take a second look at it again later. All right,
MC, I was just looking that
yeah.
up, so not to go backwards, but I don't see any news on it. The only
Which
thing
one?
I've got is, you
AMC.
think it's the maybe the Valentine's Day effect? Everybody's going out to the movies tonight with their sweetheart, pay some overpriced restaurant prices and going out to a movie. I don't know, but there's certainly one news article said they were getting some mentions in the media, but other than that, nothing much happening on AMC. That being said, I just trust Jared in the room to let me know when AMC is moving, because if anybody's going to be trading it, it will be Jared. He'll know first.
That is for sure. Did we look at Futu this morning? We did not, but I don't see anything. Again, it's just stuck within these levels here. I don't see anything happening with them. Pre-market looks pretty quiet right now, so I don't think it's a lot in play there. Let's take a look at CCO. We'll stop there. We take some from YouTube, and then we'll head over to our community events and announcements. CCL this morning, a little bit of a drop, obviously, with the overall market and everything. I saw American Airlines drop in earlier as well, recovering since then. Um, Nothing explosive. I think they're just going to move with the overall market, guys. CCL does look good as far as pre-market activity and volume, 723,000. That's pretty decent volume for them, already at 850 this morning. So that could be interesting. I'll add them as a possible, but we need a little bit more than that. I think there's some more explosive stocks this morning, but that's not a bad one. All right, we have to stop here, guys. Just one more because we haven't touched on this sector. That's going to be the banking one. So we'll look at JP Morgan and see what's going on there. Pretty quiet right now. They got 1.7, but aside from that, it's pretty quiet as far as movement. Bank of America, same thing, pretty flat right now. We know we're seeing a little bit of movement on these, but nothing crazy as we've seen with other stocks like the tech companies and EV stuff. So we'll skip on that one for now. All right, heading over to YouTube. Let's see what we have. See if I find something we have not mentioned already. We are looking down here to the list. SoFi is good. That's on our list right there. A good volume this morning, up 3%. KAVL. More of a penny stock. I wouldn't be touching this. Very active, 2.1 million. But these penny stocks trading under $1 that break out, it's just their price action is very different than what I'm used to, and a lot of people are in the chat room are used to trading. So I will stay away from something like this, right? Be very careful. If you have a strategy for it, great. Go for it. Have it on your list. It looks very active, has been very active the last couple of days. We have seen an increase in volume, obviously, right here. You can see how much that has been. But outside of that, I don't think I have an edge on this. Not I don't think. I know I don't have an edge on this. Let's be realistic. CVX here, guys. This is Chevron. Doesn't trade very well. Their daily looks good. For an intraday trading stock, it's not ideal. So just be careful with that one. The pullbacks are very aggressive. Every candle overlaps the previous candle, and their volume very, very light. For $138 stock, trading only 12 million for the entire day. Very light volume. Look out for the spread. At times it can get very hairy there. Also, here is BA. BA pretty much flat right now. Had a decent drop on Friday, like many stocks did. I don't see anything explosive on BA at the moment, but good stock. I do like trading BA. If I see that one in the scanners, I definitely can take advantage of it. We'll look at MU and Facebook, and we'll stop there, guys. MU, take a quick look here. You know what? No. Man, we used to love MU, but I have AMD. I have NVIDIA. I think I'm going to stick with those for now. Let's take a look at Facebook this morning. I think Facebook we have to have. I think this is going to be, again, it's just been so fun to watch. Right now, look at their daily. Looks interesting. We're back at the lows, guys. Back at the lows of this after this insane drop. Not looking strong at all, though, neither. So let's see where this is going to go. Yeah. Yeah.
Just been beaten down. This whole move to the Meta platform is so far not working out great for them from a from a market's perspective. Anyways,
Yeah, it sure is not. All right, guys, let's get our announcements. Just want to make sure I have the latest and greatest for you guys here. Let me just go ahead and make sure that is in play, and then we will switch over there. Reminder, today we do have Creator right after our announcements with her message for the week. Looking forward to that. So let me just make sure we got the latest and greatest here, guys. Just want to check as we people are
well,
going.
hopefully we do, because you know what? It may be Valentine's Day today, but because of our love for you, the webinars don't stop here. So we just continue with our program. We have a full slate of activities happening again this week, and let's face it, middle of February. If you're in the northern hemisphere, it's going to be relatively cold out. You need something to do on those cold winter nights. So join us here. We always have activity, especially if you're an elite member. You've got lots of stuff you can take advantage of, and during the day in the room. So it is Monday, which means it's Technology Day. We have our onboarding class that Carlos leads at 7, with a technology webinar at 8 that I'll talk about in more detail in a second. Tuesdays always follow with strategy webinars, usually helping you improve your trading strategy. We will be talking about the webinar that we're going to be having this week, as well as Eamon, who does a trade review in one of our rooms here at noon on Tuesdays and Thursdays. Wednesday is always about psychology. We have yet another webinar on Wednesday. Thursday, tons of mentorship going on, not only with Eamon's noon session, but we have Andrew and Thor doing mentorships, as well as, of course, Ed, who actually joins us in the room as well on Tuesdays and Thursdays. So Friday, then, we slow down a little bit, but focus on crypto, which is a lot of people are looking for information on it, and Jared is there to help us with that. So specifically this week, what are we looking at? Well, tonight, we have, as I mentioned, our onboarding session, which happens every Monday night at 7 o'clock. If you're new to the room or just new to trading, join. It's a great opportunity for you to sort of learn about a little bit more about Bearable Traders and a little overview about how to use the tools, and how you can get started on your trading journey. That'll be immediately followed by Kyle, who's going to be talking about the hotkeys and risk management, as he always does on Mondays. It's a great information session, especially if you've got any challenges with your hotkeys. Kyle is the foremost expert on setting those up and manage them. And we're not joking on that. He, in fact, helps advise some of the platform providers on how those hotkeys work, and is a great resource. So take full advantage of that. 8 o'clock tonight. Tomorrow night, we will be having a session at 8 o'clock with Thor, who's going to be talking about tape reading. This is the second part of his series. He's calling it the mirrors. So he often uses the expression to check your mirrors in trading, right? You got to sort of understand what's happened to understand what's coming. And it's a great session. And the next week will be followed by an earlier session. So the 22nd of February, that'll be at 5 o'clock. Whenever Eamon presents, he'll be talking about his trade book setups for breakouts. Like we mentioned, Wednesday then is psychology. On Wednesday this week at 8 o'clock, Mike will be presenting his probabilities session on making the change. It's the first part of a multi-part series, so hopefully you'll join us for that. And then next week, Kreda will be with us again, early time whenever Kreda presents, talk about taking the pain out of trading. And can't forget, Kreda is going to be with us here in just a couple of minutes with an important session, so stay tuned for that. Thursday, like we mentioned, will be mentorship. We can just have so much stuff going on Thursdays here. So Andrew's at 11. Ed provides a mentorship session right after the market, and then in the evening we've got Thor, who has his Thursday mentorship. So full day of activity to really help improve your trading on Thursday. Take lessons out of the week from that. So if you're interested in joining us, we not only have our paid subscription services like the room and all of our webinars that we were just talking about, but you can get free material. Stay tuned for some stuff that's coming up soon. It's very exciting. But right now, you can get access to our stock trading simulator. I was actually using it this weekend to do some regression testing on a couple of strategies that I was working on, because as market conditions change, you have to continually work on improving your own strategies. So I was using stocktradingsimulator.com to run a couple of situations. Give it a shot. There's no obligation. You don't have to enter any personal information. We're not going to track or trace you. But if you do want some recommended exercises that you can undertake and some simulations to run, then sign up for the watch list. All we will send you is a couple of ideas each week about what you can trade on what days, and it's a good way to sort of, point you in the right direction if you're not sure where to get started. Like I was mentioning, that there are paid subscription services. If you're interested in joining us, if you're on YouTube and want to sort of get access to some of that stuff I was just talking about that isn't readily available to you, join us for a week on a trial. See if the room's for you. It is Valentine's Day, but we always have this pre-market 24 running where you get a discounted rate on a 1 week membership. And if you want to join longer term, then use the code LOVERS50 to get 50% off our elite annual membership. So that's probably the best deal you're ever going to get on that elite annual membership. They'll give you access to pretty much everything we've talked about. So once you're an elite member, there is no other subscription above that. You get access to all we've got. So with that, like I mentioned, Kreda is with us this morning. And while I usually forget, I didn't forget today. Why? Because Kreda let me know through Twitter. And if you're not following her on her Twitter account, you should consider doing so, because she actually provides some great little tidbits and snippets. There were some do's and don'ts that I was looking at just the other day. So sign up for Kreda's Twitter feed, and you can get that information. And this morning, she is going to talk to us about why do we trade differently live versus simulator. Same tools. What's different? Well, she's going to tell us. Hi, Kreda.
Hi, Peter. I'm going to just start this off by saying there's people building a scaffold outside of my window. So if there's drilling or some crazy noises and you need to just cut me off because it's getting too annoying, feel free. I won't take offense. So I'm going to try get through it, but I'm not 100% sure a drill is not going to go off in a second.
But they're not coming to rescue you or anything, are they? They're just building a scaffold.
No. They might need rescuing from me if they make too much noise. But
okay.
So we're talking about sim trading and live trading and why there's a difference between the two for a lot of people. So this is a really common problem that comes up in coaching and just in general. I know that this can be a tricky one for traders. So often people start out trading on sim and they're doing really well. They get to a level where, they're seeing consistent results, and then they move into live trading and it's completely different. So the results are like they're coming from a different person. So that can either happen as you're transitioning from, practicing on sim and getting used to trading and then moving into live, or it can happen if you're already an established trader and you're, for whatever reason, going back on sim and then swapping to live, and you see a difference between your performance on the two of them. So in this session today, we're just going to decode why that is. So why would there be a difference in your performance on both? And then what can you do about it? So first off, what does it look like? So often when people are trading on sim and then move to trading live, they find that they actually are hesitating more, or depending on how it plays out for you, it could manifest as hesitating more, or it could manifest as making more mistakes, breaking your trading rules, and over trading, revenge trading, all of those things that trip you up and impact your profit. So what's actually at the root of that, or what's going on? And there's a couple of different ways that we can be affected when we start trading live, but really it boils down to being under much more pressure. And we start to actually attach meaning to the money. So I was watching, I think it was Andrew's recap video yesterday on the big loss, and he was talking about how you have to actually detach from the value of the money and the emotion of it and thinking about what you can buy with it. So when we move from sim to live, we often start attaching much more meaning to the P&L. It's a lot easier to be process focused when you're trading in sim. That's the mindset we want when we're trading. So once you move into live trading, suddenly you're much more aware of the money that you're winning or losing. And that shifts your focus to the P&L. And that takes you away from actually defining success as sticking to your trading rules. But what specifically happens in our psychology is that we come under more pressure, and that can do a couple of things. So it can either trigger our subconscious emotions and limiting beliefs so that we actually become much more emotional. So if our ego is attached to our P&L, let's say that we put a lot of store by our trading results, it tells us something about us as a person. So we feel that if we make a mistake or if we take a loss, it's actually telling us that we're worthless, not just it's not just hitting our profits, but actually it's saying something about us as a person or us as a trader. Then you're going to be a lot more emotional when you're trading, because what's at stake is not even just the money, but it's also your self-worth. So all of those subconscious scripts can get massively triggered when you're trading live due to the pressure. And that means it's a lot, you find that you will break your rules a lot more. So that's one way that it can actually cause us to deviate from our trading plan. And the other way it can do it is that it heaps on the pressure, and pressure actually changes our cognitive processing. So there's a couple of different ways that it can change it, and it's quite a personal response as well. But these are some of the sort of scientific ways that we know that pressure can change your thinking. It can make you focus on exactly what you don't want to happen. So that's called ironic effects, and that can cause you to be thinking and focusing on what you shouldn't be doing, and then you do it. So at its most basic level, it can also cause us to engage in paralysis by analysis. So we start overthinking everything. We start second guessing our strategy, our decision making, and we hesitate. So, or else we actually just, don't know what to do. We deviate from our plan. So that's another way it can impact us. And then it can also actually impact the efficiency of how we think, which can cause delays. So we might still get there in the end, we might still take the right decisions, but it causes our thinking to actually be less efficient. And so it takes us more time to actually get to that decision to enter the trade. And then that means that we might have missed the entry. So there's some real tangible ways that pressure can actually slow down our thinking and trip us up. So what can we do about that? How can you actually bolster against the effects of pressure when you're going live? So a couple of different things you can do. One is breathing exercises to try and pull down the level of pressure you're feeling physically. So your physiological state, you can calm that down. You can also use meditation before you start trading. So I have a profit from pressure meditation on my YouTube channel that might be useful if this is something that you experience. And that's to help you redefine pressure or reinterpret it as something that's positive, that tells you that you're ready to perform, as opposed to framing it as something really negative. So it helps you to actually embrace pressure. So that's another way you can do it. And becoming very aware of what your subconscious scripts are and how you're being triggered, that's very helpful to actually preempt anything that might happen when you go live. So this is particularly for people who are trading in sim and haven't traded live yet and are about to transition into that. It's really worth looking at if you have any subconscious scripts at play that might cause you to trade more emotionally when you're trading live. So a few different ways you can approach it. But one I just wanted to mention here, because I think it's a really useful tool, and we spoke about a tool last week around your character strengths. So this is another resource that you can tap into that can help you to actually understand what you specifically do under pressure, so how you react under pressure. And then you can take the results of that and apply it to trading. And it will help you understand where are the pitfalls that you might fall into when you're trading live because you're under more pressure. And that's the DISC personal profile analysis. So it's a tool to help you actually understand more about your personality, but also it has a component where it tells you what happens when you're under pressure and how your thinking and your decision making changes when you're under pressure. So it's particularly relevant for trading in this way. Although the tool is not designed to speak to traders, I used to use it with athletes actually in terms of helping them make decisions for their career after they transitioned out of sport. So it's really useful. It can apply to any area of your life, but it's on, and again, this is no affiliation, I'm not getting paid for this, but Tony Robbins' website has version of this that's free. So it's just the kind of most basic version. But for $25, you can take the version that will tell you your results when you're under pressure and compare it to normal. So just really quickly, I'll explain this. There's basically 4 different components of your personality that it taps into. So dominance, which I would guess a lot of traders who are risk takers, entrepreneurs, that kind of mindset would be high in this trait. Influence, so that's to do with your kind of interpersonal relationships and how you approach things from that perspective. Your stability or steadiness, so people who don't like taking risks and like structure and following process. And then your conscientiousness or your compliance, so basically how much you're into following rules. And it polarizes you, so you just answer some questions and then it tells you which 2 traits you're higher in and which 2 you're lower in, and then it gives you an actual explanation of your personality, and it's crazily accurate. So it's really insightful, and you just have to answer a few things and then you get this whole report on what your personality is like, how you take decisions, what you're motivated by, all these different things. But really crucially for trading, the piece that tells you what you do when you're under pressure will point out the pitfalls or the things that you should be careful of when you're under pressure. And therefore, if you get that report, you'll be able to apply that to your trading and preempt how you might end up deviating from your trading plan. So it's a tool to help you actually prepare for moving from sim to live trading. And just a last point on it really quickly before I wrap up is that in terms of using sim trading, so if you're already established, you're already live trading, I would recommend that you don't dip in and out of sim and live. So let's say if you've hit your max loss for the day and then you continue on in sim, it's not really best practice. So it's the same in sport. If you're using some techniques to prepare for a championship match, you should be doing the exact same thing in training as you are in competition. And it's the same in trading. You should be following the same process when you're practicing and when you're actually trading live. And the idea is that you don't want to create a difference. You don't want your brain to treat these 2 states differently. And if you swap in and out of sim and live trading arbitrarily, you're actually telling your brain that there's a difference in these 2 states, whereas actually you want to be treating them both the same and following your process in both. So it's really important to have predefined rules around when you would use sim trading. So let's say if you've had, 2 red days in a row, and then you decide that you're going to go, if that happens, you'll go on sim for a day or something like that. But you've created those rules before you ever get into that situation. So that's just something I see a lot that trips people up. So I just thought I would add that piece in there.
Great, Greta. Thank you. A lot of people are asking where exactly we find this tool. Can you
so
have the website?
It's TonyRobbins.com. So Tony Robbins, the life strategist guru. And I think it's assessment.tonyrobbins.com. But if you'll find it on his website. It could be in other places as well. Just I know that there is a free version of it there, and that the $25 version is the one that gives you the how you act under pressure and how you are normally. So you have choices as to how much you can pay for how in-depth results you want. But the actual tool is the DISC personal profile analysis, so DISC. And if you Google that, you might find other places you can buy it. Yeah.
There you go. People are finding it now. So there you go.
Great.
Excellent. Well, thank you so much for that. Glad to see that they didn't come through your window, those guys on the scaffolding. And thank you for the insight, Greta. We'll see you at your webinar later this week.
See you later.
All right. Bye.
All right, excellent. Thank you so much, Greta. Guys, let's give her a big thumbs up over on YouTube. Appreciate it very much for coming on every Monday morning to give us some really good advice, which, by the way, is great advice because I can see that. I used to think the same thing too. Let's get on sim and keep trading, but that can mess up with your mind. So thank you for that. All right, guys, let's get to it.
Yeah,
I was right, Peter. I mean, it's just really good stuff there.
Yeah, it's a very good point about not jumping back and forth. That can, then you can build habits that your brain doesn't necessarily know when to apply them. So that makes a lot of sense to me. I just wanted to mention, just on a technical side here, guys, we're very well aware there's a little bit of a delay between the sound and the visuals, especially in the room. YouTube seems to be running a little smoother. But there is a background problem with one of our software vendors, it looks like, and I know Carlos is very well aware, and we're going to try and work on that to get it better for tomorrow. But for today, we appreciate you guys sort of bearing with us.
Yep, absolutely. Thank you, guys. Guys, with that said, let's get to it. I added Piton to the list because they started dropping. They got some volume this morning, and they've been very active the last couple of days, as you can see here, getting a huge pop last week and then kind of dropping down from the 40s here. So definitely going to be taking a look at that.
We actually didn't mention it earlier because there wasn't a lot of volume. There was some news on Peloton. The new sort of the interim or newly appointed CEO did come out. Very first statement was, no, we are not looking at being acquired or selling the firm. So if you remember that they sort of took a jump a couple of days ago on rumors that potentially Amazon was interested in buying them, which I didn't seem like that was necessarily a good fit. But if they were looking to sell the company, that got the stock price a little bit of a boost. So we're seeing some of that retrace now if they're saying that they are not looking to be acquired. So who knows whether it'll be in play or not, but maybe something to keep on a secondary list.
Yeah, I agree. I think it's going to be exciting. And guys, don't think about that as overall negative news. These guys are making a lot of changes. As an investor, this is what you want to see a company do, right? Make changes when things are not going well, and they're doing that. So we'll see. We'll see how all these changes they made last week are going to affect them for the coming weeks here. Right now, very active, so I added them to my list. I am going to take off, though, NVIDIA. And probably I'm not going to keep AMD, NVIDIA, and Apple. It's just way too much. AMD breaking out nicely. Are you in that, Peter? What's going on there?
That's not me causing it, but AMD is moving up right now.
I'm going to put NVIDIA down. I'm definitely going to keep AMD. Just want to get this a little bit smaller here. We have 1, 2, 3, 4, 5, 6, 7. One too many. We'll keep that for now. But either between AMD and Apple, I'm going to probably drop one of these because the rest are looking very decent. Even Facebook moving up this morning as well. All right, let's get to it, guys. Here's SoFi today. Let's look at the secondary list. Do we miss anything? Oxy, Lucid is okay. AMC. Yeah, I think we got a really good main list. All right. Let's get some levels done. Here's SoFi, guys, stuck between the highs and lows of the last 2 trading days here, kind of right at midpoint area, right? Here's your highs from the last 2 trading days. Here are your lows. So we're right smack in the middle of this. And that seems to be a level you want to mark down as well. So around that 1278, you see some action happening here. You see some here as well, and some over here. And right here, right? So a lot of touches on that. Definitely want to put that on the list. And then this morning, you clearly can see how that is playing out so far today. So pretty good there. As far as that, I don't think you need to add anything else. You can add the low and the highs of the pre-market. They're pretty close to the previous days highs and lows, right, of the last 2 trading days. But you can add those just to get something a little bit more fine-tuned there. And now let's look outside of this window. I mean, we're right in the middle of it. A lot of support with the previous day close coming down towards that 1250, so that's good there. If we were to drop here, 1157 is a good one. You got a one right here, which is okay. You got a couple of touches there, and obviously you got to mark this one all the way down at 1050. I don't think we're going to get there, but you have it there just in case. All right, if we break out towards the top above this 1317, a couple of areas of resistance here. Obviously, you got a lot going on there. If you look at that daily above this, we're going to mark down 1356. Is a good one. And then you're also going to mark down this 1385. I think that's all you need. Again, right in the middle of this thing right now. A few times we have moved. We had some good volatility on some of the moves here and just came back right to this center. So let's see what we do today. So far right now, pre-market actually is looking very good, guys. We got tons of volume on this. 3 million shares traded on SoFi today. Here's a firm, dropped a bit and then recover again. So we're building a nice little base here of the pre-market lows, guys. 44.02. So that is good there. Actually, pre-market low is a little bit lower, yeah, because we have this guy over here. So we can mark down this as well. But I think this area is important, right? Not your pre-market low, but you have a lot of support happening here. So I think this is worth marking down, right? 44.02, and then your actual pre-market low is at 43.51. So we could keep those levels on there. All right, we're going back here to see if we find something below the 43.52, which is the low of the pre-market, and we do not. That is your all-time low. Just make sure. Yep. All right, all-time lows, guys. There. Last time we were this low, anywhere close, it was back in May of last year, right in here. We the previous day close, actually the previous all-time low there, and we broken that through the last couple of days here, including this morning, setting a new low over at 43. 52. So I'm going to mark down this one, 48.64. You have a couple of days bouncing off of that. That is nice there. We'll just see how that's going to play out on today's action. Then towards the top, guys, after we marked down that 48.64, which was our previous, close to our previous low there, I think you're all set. Highs and lows from the last 2 trading days. A lot of action towards the top here. Let's see how AFM is going to react. They had a really big drop here the last couple of days, man. They are not having fun. We'll see where this goes today. Good volume on them as well. Here's Neo, guys, looking good, 1.2 million. Their daily looks nice, right? You had a nice little drop here, a little bit of recovery, and then you're just kind of moving sideways a little bit here, trying to figure out what's next, right? A little bit towards the bottom of the support area. We're going to find some levels here on the daily, starting with first with the pre-market low, 2301. We'll slam something there, and that you can see some good confirmation happening here in a couple of days back from today. Over here, we have another day, not as much strength on this 2173 as you do have on, for example, this 2301, right? A lot of days bouncing off of that 1, 2, 3 right here, and you even have this one going back over here, so that's good. And then all the way down to 19. Again, I don't think we'll get there unless the SPY helps them with a flush today, but we have 1935 on there as well. High of the pre-market this morning, almost 24, 23.91. Above that, guys, you have plenty of stuff. Do not need to add anything. Highs and lows from the last 2 trading days, creating a lot of resistance up here. Let's see where this wants to go today. Showing a little bit of strength right now. Still down 1.5, but again, up with 1.2 million shares traded so far. Daily looking good and very active. Here's AMD, guys. Beautiful pre-market activity. This thing was down as far as 110. Did we hit 110? Yeah, we did very early on. 110 is the low of your pre-market. We're up now $4 from the lows of the pre-market, guys. So nice movement here on AMD. I mean, every time I look at the stock, I think about when we used to trade this, Peter, back in the days. I mean, if you got, and you know this, if you got 10 cents out of AMD, you were swimming in gold, my friend. Now, now it's dollar moves. I mean, it's just crazy.
and the spread has opened up. It used to be a 1 cent spread
Yeah,
all the time.
yeah, all the time.
Now you
No
gotta
matter
be
what.
careful. The spread will open up. Your
Yeah.
risk has to be significantly larger. So it's trading different. I mean, I still like it, but you have to acknowledge its different personality.
Absolutely, definitely has changed quite a bit for the good. For the good, definitely has been an amazing
Yeah.
stock to keep on deck here. 14.98 high of the pre-market, 18.54 I marked here as well. Got a couple of days touching that there before we get to the highs and lows of the last 2 trading days up here and the lows from the last trading day down here as well. So you got plenty on here. I'm only going to mark these 2. I think that's all you really need. Then you have a lot of supporting levels around this price section right now. We'll leave this as is. Beautiful pre-market activity today. Looking forward to AMD here. Here's Apple, not as clean as AMD as far as a pre-market action, but not bad. The daily does look more interesting though, right? We had this nice little pop here. We consolidated for a bit here. The SPY dragged us down a couple of days here, and now we're just kind of hanging out here below the previous day close. I think this will be interesting, and we know Apple has been trading very well, always gets the volume, but today they have higher than usual volume, guys, at 1.8 million. So I like that volume for sure. 165.25 low of the pre-market, 162.78 good level here of support and resistance. So we're going to mark that down. And obviously all the way down here again, I don't think we get to these levels unless we get some insane movements in the markets, which with everything going on, guys, it is so possible. So definitely keep an eye on the SPY. Towards the top, previous day close, highs and lows from the last 2 trading days based on all this consolidation. So we are set there. Here is Meta. Meta this morning, we are, again, slamming against the previous day close here and the support we had from 3 days ago, right on there. So low of the pre-market right now, all the way down to, seems to be 216.52. We'll slam a level there. And then, again, we haven't been down here, guys, in quite some time. I'm not going to worry too much about the top. We have plenty of levels from the highs and lows of the last 2 trading days. But towards the bottom of this previous day of the low of the pre-market, let's get some levels off here. We looked at this one last week, 207 is good there. But again, we also have a couple in here going back to May, right in this area, 211 or so. Got a couple of days using that support and resistance on there. So I'm going to keep that there. Not huge, significant levels. Like, for example, this level here is more significant, this 201, because you're using that as clear support there. getting bounces off of that, right? I love levels when they give you a change in direction. That's mean people are believing this as support. That 201 is a major level. These two here put a little bit less weight, but they're good levels to have on the daily as well. Let's take a look at Piton today. I just added that one last on our list because it is moving here, 493,000. As we spoke earlier, there's a lot of stuff happening here. New CEO, confirmation that they're not looking to be acquired as well. 3310 is your low of your pre-market. That's going to be marked there. Towards the bottom, we have 3163. And then all the way down here, when we had this beautiful takeoff last week. And this was the one based on that news, right? The news of them being acquired. We gapped up and then we took off on that day here. 2978 is a good one. And you're all set towards the top because you got plenty highs and lows of the last two trading days there. All right, with that said, let's take a look at our moderators lineup. Let's see what they have going on there. All right, we got a couple on already. Let's take a look over here. Let's bring that over. As I'm doing this, guys, resizing this for it to look a little bit better on your screen. Hit that thumbs up over on YouTube if you haven't done so already. We appreciate it very much. Sitting at 187, we love to be at that 250, 300 likes. Appreciate it very much. It does help us out a lot, guys, when you do that. So thank you so much for that. Here it is. Here is our watch list to start this week, guys. Looking forward to an amazing week. Let's make sure I didn't miss anyone. No, a couple of announcements there. And we start here with AMIN, potential long, American Airlines, MRO, potential shorts, a space this morning, SPCE. Dima is looking at Piton, Facebook, AMD, and Apple, and a great list there. Megan is looking at Netflix, MU, and BA. Jared is looking at SoFi, AMD, MU, secondary list, Facebook, PayPal, and NVIDIA. Tiffany looking at AMD and Piton as her main list, secondary list, Affirm, and Tesla today. Here is Brian, which will be on shortly after us here, live for YouTube. Brian is AMD, MU, Piton, Affirm, and SE. And then Susan will be looking at AMD, Lucid, and SoFi today. So pretty good list. A lot to choose from this morning. A couple of names from last week that are moving nicely. Peter, you're reporting just one IPO for today, which is VIVK, and I don't think I saw your list. So tell us about your watch list this morning.
Yeah, I haven't got it typed out yet, but certainly AMD, as I always watch. I'm going to keep an eye on Apple and Peloton. My secondary list, I'm going to be putting, I think, Lucid. I like the look of that. I'll also be keeping an eye on Affirm just because it moved so much last week and I had some fun with it. And Facebook, some old standards.
Right. Excellent, guys. It looks good. All right, as Brian hops on here, we'll switch over to him and we'll get his take on the overall market this morning and what he's looking to do. His list, has to just remind you, AMD, MU, Piton, Affirm, and SE. So he'll talk about what he likes there and some of the things he's looking forward to. Well, as far as our list this morning, let's recap. We have SoFi on the list, 3.2 million shares traded. Good volume here. We're going sideways a little bit right now, so not much activity as far as movement, but the volume is there. So we had a good pop earlier on. Let's see if that can get to going anywhere. I'm not a huge fan of this stock, but we'll see where that goes. Here is Affirm, guys. Get some good movements. Just keep in mind this is a very risky stock. Take a very low number of shares. Do not go crazy on this. You want to make your money on the move here, not on the size you take. Very, very important. And you can make really good money, guys, with just simply 100 shares, right? You don't need to go crazy. NEO is good. AMD we have on the list as well, moving very well. Beautiful pre-market activity. Apple is getting there. Meta is looking good as well, staying in the green. And Piton here getting a little bit of a bounce like that one as well. All right, I see our friend and buddy Brian is on. And he does have a shirt. Brian, good morning.
Good morning, everybody. It's Peter's.
How are you
to
today?
Peter's
How was your
dismay.
weekend?
Good. I can tell Peter's disappointed that I have a shirt on, but there you go.
Oh, well, I always look forward to seeing as much of you as I can, Brian.
Absolutely.
All
Guys,
right.
over on YouTube, make sure you hit that thumbs up, but also stick around. Brian is going to go all the way into right before the open, so stick around. Don't leave just yet. He'll give his take on his watches and what he likes today. With that off, I'll switch over to him and see you guys tonight at 7 p.m. for the onboarding class over on YouTube.
All right. Thanks, everybody.
good.
Take care.
Thanks.
Stay safe.
Thanks, Carlos. Hey, good morning, everybody. We got less than 5 minutes to the open here. So, as always, this is kind of the time I really try to figure out what's going to move and what isn't. Peter mentioned LCID. It actually is starting to look a little interesting to me as well. So think I might add that to my list of watched stocks. Starting to pick up. It looks like it might go green. I had that short over the weekend, and I covered it this morning when it went down under 25.50 there. So I think it's going to maybe bounce back. Markets look a little bit flat this morning, but I think there's no, obviously at this point, there's no real panic going on, no panic selling. No buying. We've actually got the small caps in the green right now. IWM. Taking some. I had some gold and silver over the weekend. Taking some of that off this morning. I'm not really sure where things are going to go here this morning, so just locking in some profits because this is a little bit of a squirrely market right now with all the headline risk going on. So. RBLX actually looks interesting as well. It's starting to catch a bid. So I think I'm kind of actually interested in RBLX as well. What else? AMD's still looking pretty interesting. It looks like it's going to be strong at the open. What else? SE looks weak. I was looking at that as a rising devil. The only thing I don't like about it is that the spread is a little bit excessive. Good morning, Andrew. All right. Well, we got 2 minutes to the
sir. Good
open.
morning.
Yeah, we got 2 minutes to the open. AMD,
So
MU
my
looking
watch
interesting.
is
Yeah,
pretty much
LSID
you,
went
sir.
green. Yeah, I'm just going to sign off of YouTube to our friends on YouTube. Have a good rest of the morning, everybody, and we'll
Yeah, thanks, guys.
get down to trading in the room here. Cheers, everyone.
Alrighty. So